Mickey Dickey here. Most of you have saw my other videos. One of the things I was keeping track of this week were retail sales, more specifically on the companies such as Walmart, Target, and so forth. But retail sales came out today. I just wanted to give you my 2 cents worth out on that, as well as Home Depot. Now, retail sales rose 0.4%. And I love the headlines because, again, we can't just tell you what's going on. We have to give you some stupid explanation as to why things are going on and doing what they're doing. Less than expected as consumers struggle with inflation. Really? Is that why? Where do we come up with this? How do we know this is the reason why retail sales only rose 0.4% when the analysts expected 0.8, of course, because we all know the analysts are always on target and know what the heck they're doing. But what I wanted to show on this is where the retail sales come from. Again, not hard to find. Google it, takes 2 seconds, okay? What I don't want you to get caught up in is what all the idiots are going to get caught up in. Now, this is just basically the last year, okay? Now, you had 2 months in a row where it was down, and you had a big one here. And what I try to show on numbers and statistics are that things always aren't linear. I'll give you an example. When you go and you're doing something, like last year, we did some projects around the house. I did some projects in February, I did some projects in March. Didn't do anything in April, did some more in May or whatever. They're not done because I didn't have money. They weren't done because I didn't have time or couldn't get things put together on time. So when people say that things happen in a specific time frame, again, it never makes any sense to me. And what I try to tell folks is that don't look at 1 month. Don't even look at 2. I usually try to look at least 3 or 4. So as an example, you've got a 2.8 here, which if you remember, everybody freaked out about it because that was at the end of January. And everybody was saying that inflation's back and everything's going crazy and the Fed's just going to have to push. Now, again, the Fed only went up 0.25%. And you mean that the Fed did that and that caused this? No. Something's got pushed ahead, probably. And again, there's no guarantee. Doesn't have to be an answer for this. But if all you do is just simply add these together and take 2.8 plus the 0.4 we've got here, and then you subtract 0.7 divided by 4, it's roughly 0.5% a month. Now, isn't that kind of what we want? Around 0.5% a month? Again, I could be wrong. And looking back, if you do the same thing, it kind of averages out to where we want it to be. So don't get all freaked out about if they wanted it at 0.08. Okay, but why isn't this a positive thing? This is what I don't understand about this, because this is what I keep talking about, the inconsistencies and how things are being reported. If you're really thinking that we want things to be negative so that the Fed stops raising rates, is this not what we're looking for? When all the analysts are expecting 0.8 and we get 0.4? Isn't that what we want? Isn't the fact that the 2.8 was too high and these 2 months brought it down and this didn't go up crazy, that, again, we're in the right boat? And again, if you go back through the last 8 quarters, does that not average out what we want it to be? Again, we don't have to have an answer for all of this stuff. But we know what the reality is. And the reality is that if you draw a straight line, it's right around 0.5%, which is about what we want it to be. Now, what does that mean? We also got Home Depot today. And I love this because all the morons are on television today talking about how Home Depot is making something big. And again, they're making a bigger deal out of Home Depot than needs to be made a deal out of. Because here's Home Depot. The guy from Home Depot comes out and the CEO is talking about all this stuff. And they actually beat on profit and they were a little bit low on sales. And they're talking about going down between 2 and 5% for the year in sales. Now, let's put that in context for a minute. Last year, the trailing 12 months, they did $157.4 billion. If they go down the full 5, which again never happens because they always go too far, it would be $149.5 billion. So not quite $8 billion lower. So they're going to do somewhere between, say, $2 billion and $8 billion less than last year. So they're going to do somewhere between 150 and 155 billion. Oh, hurt me. They're really struggling. But the part that I think is getting completely missed when it's being reported is they're actually made more profit than they expected this year. which if you remember when I was talking about some of the other videos, when we were talking about actual inflation, why we were questioning why inflation was higher, even when all the inputs were down. The reason for that is simple. When you have a company that has less sales and has more profit, what that means is that their margins are better. The only way the margins can be better is if the input costs are lower and they didn't lower the price of something. So as an example, a year ago when they were selling a widget for $100 and the cost of that widget last year was $80, so they made a $20 profit. This year, they're still selling the widget for $100, but the widget only cost them $75 or maybe $70. They're making $25 or $30 per widget instead of $20. So their profit margin has gotten better. Now, this can last for a period of time, but at some point the costs continue to raise back up, and if they can't raise the cost on the other end of it, that becomes the issue. That's why there's a concern about the inflation part here, and why I keep saying there's a part of this equation that hasn't been adding up. Now we're seeing it, where the input costs for a company like Lowe's, which I say, we're talking about those input costs, they're all down. The lumber's down. All the stuff that goes into the gasoline is down from year over year. So in reality, the prices should be coming down, which they haven't been bringing them down. What they've been doing is keeping the prices the same and taking the cost to themselves and being able to make more profit. So again, that'll last for a period of time, but again, next year we're going to run into the same situation where either their input costs are going to continue to go down or they're going to stay the same, and it's going to squeeze their margins, which is always the concern down the road. Is this the start of something bigger? Is this the start of something small? What ends up becoming an issue here? And when we start looking at the sales, so here's again, start talking about it's less than expected. Again, why not be positive about this? We had 2 months in a row where it was down. Now it's up, but struggle with inflation. We know we're struggling with inflation. And here goes back to another Home Depot deal, which again, it's down. Now what I want to point on this is that the fact that it missed on sales but made profit and it lowered its expectations for profit or sales for the rest of the year, to be down 1.5%, 1.7%, that's a normal market response. This is what I'm looking for. These are the trends that I'm trying to see. I want to see normal market responses to things. What I don't want to see is a company like Home Depot that does something like this and is down 10, 15, 20%, which is what was happening a year ago and even 6 months ago on some of these stocks. The answers to what they were doing were just completely out of whack. But even with Home Depot, I wanted to pull these up here. So this is what I wanted to show. You're talking about 110 billion here, 132, 151, and last year 157. Now again, we're talking about not doing 157. I'm probably talking around 152, 155 for the next 12 months. Okay. Again, it's not like they're going bankrupt or there's a concern out there. It is a normal business flow. That's what we need to talk about here, and that's okay. It's also taking into consideration the fact that they're raising prices. They started doing that last fall. So that's a positive thing. So all the stuff I'm hearing from Home Depot, in my opinion, is positive. So here's another one I wanted to pull up. Home Depot drops for the first time in 3 years. Oh no. Again, when we start taking into context, when you have 3 years like they've had to go down for a little bit, it's not a problem. Again, this is not a situation where the company's going to go bankrupt. It's not that big of a deal. It's okay. It's a normal business cycle. But it's also not necessarily something that's going to happen every single quarter either. It might, and we'll see when we come to some of these other numbers. But I also don't want you to freak out or listen to some of these other numbers as though they're just the end-all be-all either. We might get TJ Maxx tomorrow, and they might come out and say the exact same thing Home Depot does. Next week, we might get Lowe's that says the exact opposite of Home Depot, which is what happened last quarter. They were completely at odds with each other and what was going on. Look at what's happened with Walmart and Target the last 12 months. They've been completely the opposite of each other. Again, that doesn't mean that you can take one company and extrapolate it out over the whole industry, and you can't. And that doesn't mean that the whole retail sector is this way. That's okay too. Again, deal with reality. The reality is Home Depot is going to be fine. They're going to run into things. My bigger question is, as we continue to go, let's watch the trends. Let's watch reality rather than trying to make these big extrapolations and what's going to happen go forward. Why don't we just deal with the fact like we're looking at sales, you had 1 month that's an anomaly. If you add all of these together in the last 12 months, it makes perfect sense. Just because they're up and down, again, it's like a stock. They don't necessarily go smooth. They're going to go up and they're going to go down. That's okay. People don't do things exactly the way they want. It's just like they start talking about travel. And they're going to make some big deal about this because that's what the news is talking about right now, that people are reallocating their money from doing home improvements to travel. Okay, and they might be. But who cares? Again, it's not going to kill Home Depot to have this scenario where people did that. They're spending their money elsewhere. And again, it might just be that they took a trip in February instead of doing a home improvement deal with Home Depot, and they pushed the home improvement off until April or May and switched it around. And next year they might do the opposite thing. Again, I don't know why we're hung up on this and wanting to deal with things on a daily basis. There's nothing different today than yesterday. We knew things were going to be down with Home Depot. We knew that sales were going to be a little bit better. But here's the thing. They're a little better, not massively better. This should be a positive thing. The market's been freaking out about this for months, and they've been trying to get the economy to cool. To me, this is exactly what we want to see for the economy to cool but not fall off a cliff. That's like employment. We want employment to not go up too much, just a little bit, but not get too soft. You can call it the Goldilocks, call it whatever you want. The market's already responding and doing its job. This is what I would expect to see. After a 2.8, I would expect a couple of months of this and then a recovery. I would also expect a 2.8 when we had 2 of these months in a row. Just makes sense to me. Again, being logical. So to me, the retail sales don't mean a whole lot unless you take it in a larger picture. And if you take it in a larger picture, it's right where it's supposed to be. It's not too high, it's not too low, it's perfect. And the Fed's going to look at this. I'm not the only one seeing this. The Fed's going to look at this, and this is going to be one more of the indicators that they look at their next meeting and go, you know what? We've got 2 more CPIs here that we're down. We've got, at the next meeting, they're basically going to have 11 months in a row where inflation's down. Unemployment's probably going to be held steady. We've got some things that are showing deterioration but not falling off a cliff. I think it's really going to head us where we need to be. So as far as Home Depot is concerned, again, I'm not concerned about it. Things are going in the right direction. I'm actually pretty happy with the numbers that they came up with, and especially if next month comes in a little bit, or next quarter comes in a little higher than we expected, which is my guess. I'm guessing that you had some things pulled forward into the previous quarter. You got some things that got pushed off, and looking at the 3 quarters in a row, that's going to give you a better picture of what's going on with Home Depot. It's the same thing with the sales. The sales have already worked themselves out, and they're where they're supposed to be. So these are the trends I'm looking at. These are the underlying currents that I'm seeing. I don't see any major issues here. In fact, this is the perfect story. If we didn't have the debt ceiling hanging over our heads, so to speak, I think you'd see the market actually responding better. Maybe not specifically to Home Depot, because again, the fact that it missed on the earnings and is lowering its forecast, it should be down 1, maybe 2%. That's a normal reaction, and I'm okay with that reaction. Now, it might actually get some people who want to buy Home Depot into the market with it. Again, not what I'm suggesting, but it might be a scenario where people were looking for an entry point and going, hey, these numbers look pretty decent. When I look at Home Depot and I look at retail, again, I try to look for 2 or 3 quarters in a row rather than 1 to actually give me what I'm looking for. But this is a nice start for me because it's actually finishing off where they started a couple quarters ago. So it's giving me a pretty good trend in where I want it to be. And I'm really interested to see next quarter to see if what they've just told us is going to come through in their numbers. And again, I'm interested to see how the market responds to this. So that's one more trend that's going to help me down the road look for my clients and how I'm going to invest their money. But I look at the retail sales that came out and I look at Home Depot, and it gives me a nice little trend here. And I think if you look at it, you can actually see the numbers I'm seeing too. So again, my 2 cents worth. Keep investing on your long-term financial plan. Talk to your financial advisor, and retire when you want to retire and how you want to retire. Dickie out.